Hi, my name is Nur Umaira Karina binti Syaibu Anwar, number matrix A24A03058. We'll be introducing about meaning of Islamic capital markets, the importance of basic guidelines, and also role, issues, and recommendation. So, meaning of Islamic capital market is a financial market that operates in accordance with Shariah principles, ensuring that all transactions avoid riba, gharar, and activities that are prohibited in Islam. It provides a platform Sharia-compliant instrument such as equities, Sukuk, funds, and unit trusts, offering ethical and transparent investment opportunities. So, there are four important of SC guidelines, which are ensure Sharia compliance in Islamic capital markets products, protect the rights and interests of investors, promote transparency, accountability, and market integrity. And the last one are increase global investor trust and participations. Rules, issues, and recommendations are Sharia advisor ensure that Islamic products like Sukuk comply with Sharia standards. However, Sukuk faces issues such as lack of standardizations, high compliance costs, and low investor awareness. To improve market needs global standardization, stronger investor education, innovative product development, and closer collaboration between regulators and institutions. That's all for me. Thank you.
Assalamualaikum and hi, my name is Nunadirah binti Ahmad Sawawi and my matric number is A24A3398. Here I will present about Sharia governance in the Islamic capital market, ICM. Sharia governance refers to the framework, policies, processes, and institutional arrangements that ensure all financial products, services, and operations follow Islamic principles. This is very important because the ICM deals with instruments like Sukuk, Islamic equity, Islamic funds, and other Sharia-compliant securities. The main objective of Sharia governance are to make sure that all products and transactions strictly comply with Sharia rules. Second, to protect investors from non-compliant activities. Third, to strengthen market confidence. Fourth, to promote harmonization and standardization across different jurisdictions. And last but not least, to enhance the credibility and sustainability of the Islamic capital market as a strong alternative to conventional markets. Next, let's take a look at the governance process and institutional roles in Sharia governance. The governance process involves several steps. First, pre-issuance screening, where products like Sukuk or Islamic equity are vetted to ensure compliance with Islamic law. Second, ongoing monitoring, where products are regularly reviewed, especially if there are changes in business activity or investments. Third, Sharia audit and reporting, where independent audits provide assurance to investors and regulators, and annual reports are published for transparency. Institutional roles also play an important part. First, securities regulators such as the Securities Commission in Malaysia set the legal and regulatory framework. Second, Sharia Advisory Council provide authoritative rulings on Sharia compliance. Third, market players like issuers and fund managers are responsible for implementing Sharia decisions in the operations. And finally, independent Sharia auditors ensure that products and practices always remain aligned with Islamic principles.
Now I will present the guidelines on registration of Sharia advisors overview. So, guidelines on registration of Sharia advisors were issued by the Securities Commission Malaysia on 10 August 2009 under Section 377 of the Capital Markets and Services Act 2007. The main purpose of this guideline is to ensure that only qualified and competent Sharia advisors are allowed to provide advice in the Islamic capital market. This strengthens investor confidence that Sharia-compliant products are properly supervised. The guidelines applies to individuals or corporation advising on products such as Sukuk, unit trust funds, real estate investment trusts, exchange-traded funds, wholesale funds, and other Sharia-based structured products. It requires all Sharia advisors to be registered with the Securities Commission and also set out the criteria for registration, the renewal process, and the circumstance under which an advisor may be deregistered.
Hi, my name is Nur Amira Ashiki binti Muhammad Nazman, and I want to talk about the several criteria and requirements to become a Sharia advisor appointed by Malaysian Security. Firstly, the individual must be a Malaysian citizen, and the individual's company can register as a Sharia advisor by meeting the criteria set by the Securities Commission of Malaysia, such as having a professional background, experience, integrity, and a good reputation. Furthermore, the individual must also have a financial institution approved by Bank Negara Malaysia (BNM). However, the second part, the individual also needs to go through a registration process assessed by the Securities Commission Malaysia by downloading the registration application form, a filling but a declaration form regarding attended at 3 CPE courses. Then, the individual must submit this application to the Securities Commission Malaysia along with supporting documents such as course certificates, experience certificates, and professional certificates, and the Securities Commission Malaysia must conduct an assessment based on the established criteria. The last criteria is about the role and assessment by the Securities Commission of Malaysia, which acts as the main body in determining the Sharia status of capital market product or activities, as well as the fatwas issued with binding authority. ICMPS must emphasize the Sharia advisors to conduct Sharia due diligence and Sharia announcements such as justification, product structures, and the purpose of fund usage in accordance with the principles of Maqasid al-Sharia established by the Securities Commission of Malaysia. So that's all from me about criteria for individual to become the Sharia advisor.
Assalamualaikum. My name is Nur Afifah binti Bakri. My matric number A24A3375. Today, I will be presenting on roles and responsibilities of Sharia advisors in the Islamic capital market. As we know, Sharia advisors play a very important role in ensuring that Islamic financial products or services comply with Islamic law. Their responsibilities cover the period before issuance, during issuance, after issuance, and also include ethical and reporting responsibilities. Let me explain each of these in detail. Before a product is issued, Sharia advisor act as the gatekeepers. They review the overall structure of the product to ensure it complies with Sharia principles. They check the contract such as murabahah, ijarah, and advise on which is the most suitable. They also review the legal and financial documents to ensure there are no prohibited elements such as riba or horror. This stage is crucial because if the structure is wrong at the beginning, it will affect the whole product. Second, during the issuance stage, the responsibilities of Sharia advisors continue. They monitor the process to ensure no prohibited elements are involved. They review advertisements and prospectuses to make sure that all information given to investor is accurate and not misleading. At the end of this stage, they issue a Shariah compliance certificate which serves as proof that the product is in line with Islamic principle. Third, after issuance, after the product has been launched, Shariah advisors still have an important role. They conduct regular Shariah audits to ensure that the product remains compliant. They also prepare compliance reports for both the company and the Securities Commission. If they find any case of non-compliance, they must recommend corrective actions and ensure those actions are implemented. This continuous monitoring builds trust and confidence among investors. Finally, Shariah advisors must also uphold ethical and professional responsibilities. They must act with integrity, independence, and avoid any conflict of interest. They should also continue enhancing their knowledge because both Islamic law and financial practices are always developing. If they discover any serious non-compliance, they have the duty to report directly to the Securities Commission. This shows that their role is not only to advise but also to protect the credibility and integrity of the Islamic capital market. In conclusion, Shariah advisors have significant responsibilities before, during, and after the issuance of a product, as well as in maintaining ethical and reporting standards. They ensure that Islamic capital market products stay true to Shariah principle while also protecting investor confidence.
Hi, Assalamualaikum. My name is Nur Aisha Najwa, matrix A24A3329. Now, I will share about Sukuk, an important Islamic financial instrument, and I will explain about what Sukuk means, a briefing history of Sukuk in Malaysia, and how it's different from conventional bonds and Sukuk. Sukuk is an Islamic investment certificate that represents ownership of the real asset, a benefit, or a project. The profit comes from the income of the asset, not from interest. Sukuk must follow Shariah principles, so it uses contracts such as ijarah, musyarakah, and mudarabah. In simple words, Sukuk is like a Shariah compliant version of a bond, but is backed by real asset and does involve interest. In Malaysia, Sukuk started in 1919 with the Government Investment Issue or GII. In 2002, Malaysia issue is the first global sovereign Sukuk through Khazanah Nasional Berhad. Between 2000 and 2012, more than 149 Sukuk were issued, worth over 158 billion. Today, Malaysia is the largest Sukuk in the market in the world, holding more than 40% of global issuance. The main difference is ownership. Sukuk give investor part ownership of an asset, while bonds are only a debt owned by the issuer. The return from Sukuk come from the performance of the asset or business, while bonds pay a fixed interest, which is not allowed in Islam. Sukuk structure under Shariah contract, but bonds use a normal loans agreement. In terms of risk, Sukuk investors share the risk according to the contract, while bondholders face the issuer credit risk.
Hi, my name is Nur Shazwani binti Muhammad Rashidi. My matric number was A24A3168. So for my part was basic principles of Sharia in Sukuk. So actually when issuing Sukuk, there are several important Sharia principles that must be followed. So the first one is there is no interest, which is a riba. So actually all return must comes from legitimate profit or rentals of real assets rather than fixed interest. This ensures a fairness for all investors. So the second one is no gharar, meaning excessive uncertainty is allowed. The contract must be clearly state the types of asset, duration, price, and how profit are distributed, so that investors know exactly what they are investing in. So the third one is no maisir, which actually also speculative and gambling activities is permitted. Sukuk must also be asset-based, backed by tangibles, assets or project, giving investor real ownership rights. Finally, all terms and conditions is actually must comply with Islamic law and be approved by the Shariah advisory committee, ensuring that the investment is fully Shariah compliant. So the second slide was types of Shariah compliant contracts used in Sukuk. Like we know, there are several types of contract commonly used in Sukuk structure. For the first one is Ijarah, that involve leasing assets with fixed rental payments. The second one was Mudarabah. It's a profit and loss sharing arrangement between investor and entrepreneur. And the third one was Musyarakah, that represents a partnership where both capital and risk are shared. And the fourth one was Istiqna, that is actually used for projects or assets that are still being constructed or produced. And then lastly was Wakalah, that allow investor to appoint a representative, usually the issuers, to manage investments on their behalf. Like we know, each of these contracts ensure that the Sukuk remains compliant with Sharia principles while providing legitimate profits opportunities. And the second one was importance of Sharia compliance. Sharia compliance is actually essentials in Sukuk to ensure that the investment is free from prohibited elements such as riba, gharar, and also maisir. And it will also protect investor rights and maintain the credibility and reputations of the Islamic finance market, and increase a global investor confidence. By following Sharia rules, Sukuk actually provide not only financial returns but also ethical assurance, which is key for trust and sustainability in Islamic finance. That's it. Thank you. Bye-bye.
For the Sukuk approval and issuance process, there are 6 main steps. The first step is the application. The issuer or the principal advisor submits an application to the Securities Commission, together with all the required documents, such as the draft prospectus and the Sukuk structure. The second step is review by the SC. The Securities Commission will check from legal, technical, and regulatory aspects to make sure everything meets the guidelines. The third step is Sharia review by the SAC. The Sharia Advisory Council will review the Sukuk structure to ensure it follows Sharia principles and contracts such as Ijarah, Mudarabah or Wakalah. The fourth step is SC approval. If the structure is approved, the SC issues an approval letter, sometimes with additional conditions to follow. The last step is issuance. The Sukuk is then offered to investors, and if applicable, it is listed on Bursa Malaysia for trading. The last step is post-issuance reporting. Even after issuance, the issuer must send regular reports to both the SC and the Sharia Committee to ensure continuous Sharia compliance. Next, I will explain the rules of the Sharia Committee in the Sukuk process. There are 3 main stages: before issuance, during issuance, and after issuance. The first rule is before issuance. The Sharia Committee reviews all the Sukuk documents and confirms that the structure fully complies with Sharia principles. The second rule is during issuance. They monitor the issuance process and give advice if there are any change to the terms or structure that may affect Sharia compliance. The third rule is after issuance. They conduct regular Sharia audits, review the issuer reports, and confirm that the Sukuk continues to follow Sharia requirements.
Assalamualaikum and hi, my name is Wana Farhani binti Zainuddin. My metric number is A2483793. In my part, I will share about the issues and challenges in implementing Sharia guidelines. These guidelines are important to ensure ethical and Islamic compliant investment, but there are several obstacles. Firstly, restriction of compliance, in which there are many institutions faced with high costs, lack of infrastructure, and limited sources. Even smaller firms also especially struggle to track environmental, social, and governance compliance. Next is difference in Sharia analysis. There are different interpretations among Sharia scholars. One council may approve an investment, while another one may reject it. This can create uncertainty and make cross-border investments into difficulty. Thirdly, shortage of a Sharia advisor. Without enough experts, product approval is delayed, oversight is weaker, and it can lead to investor confidence that may goes down. Lastly, lack of standardized in reporting. The institution most likely to use a different reporting formats. This can be reduces transparency and raises doubts about whether the guidelines are properly followed or not. In overcome this problem, we definitely need a better resource, more training, and of course, standardized practices. I think that's all from me. Thank you.
This is the summary of the role of the guidelines. First is ensure that only qualified and competent Sharia advisors provide advice in the Islamic capital market, which is ICM. And then set clear criteria and procedures for registration, renewal, and re-registration of Sharia advisors. Next is guarantee the Islamic capital market products like Sukuk comply strictly with Sharia principles. Lastly is protect investors by ensuring transparency, accountability, and safeguarding their rights. For the recommendations, the first is promote global standardization of Sharia standards to reduce cross-border uncertainty. Next is increase investor education and awareness on Sharia compliance products. Next is encourage innovative product development aligned with Sharia principles. Lastly, for the recommendation is foster collaboration among regulators, market players, and Sharia advisors councils.